Well, I want to get into how you're moving the U.S. economy and what your gauge is on the U.S. economy, given that fact. I mean, we've seen Norfolk this morning boost revenue growth for the full year slightly to 13% from the prior 12%. Strong pricing, fuel surcharges. What is your take on the state of the economy right now? Are you starting to see pockets of softness, or is there resiliency?
Well, certainly there's added uncertainty in the U.S. economy right now. However, we're seeing a little bit of slowness in the consumer growth, but the consumer is still growing. And yet at the same time, we're seeing strength in other markets, such as manufacturing, energy, and agriculture. And as I look at it through the lens of Norfolk Southern, Morgan, there are a number of macro factors that favor Norfolk Southern, and long-term trends certainly play to our strengths. We've got a franchise that's built for growth, and we serve the fastest growing segments of the U.S. economy. We serve a majority of the consumption and manufacturing in the United States. We have a diverse and desirable portfolio of customers, and as sustainability becomes more and more important to our customers and their customers, it's driving highway to rail conversion opportunities for Norfolk Southern. And we have built a powerful intermodal franchise that serves the consumer, and we've got best-in-class channel partners in that space, J.B. Hunt and Hub Group.
So let's talk a little bit more about that intermodal service. We know that there was a lot of congestion in the last couple of years on the West Coast ports. We've seen more of those containers move to the East Coast, which would benefit a Norfolk Southern. You've launched some pretty interesting, I'll say, partnerships to be able to combat this and move more of those containers. I think about the one with Hapag-Lloyd, that's out of the Port of Virginia, moves containers to Chicago, where Union Pacific then picks those up. And you're seeing some of those intermodal cargo move back and forth more quickly across the country from the East Coast. Are you going to expand that out? And what does that mean in terms of more business and how that translates to the bottom line?
Yeah, absolutely, Morgan. As I look at our franchise, our job is to deliver a consistent and reliable service product to our customers and innovate solutions to help them grow and compete in a dynamic global marketplace. As you noted, in the near term, that means helping our customers overcome supply chain disruptions, such as that East Coast, the West Coast land bridge that you discussed. In the medium term, we've got opportunities to be opportunistic in a couple of markets, including energy. And longer term, we're going to leverage our unique franchise strengths to be an industry leader in growth. And that includes intermodal, as you noted. We are locked and loaded for growth in our intermodal franchise.
Hey, Alan, it's David Faber. You mentioned supply chain, and I just want to reference your conference call because you seem to believe that supply chains would unlock a bit faster than they have. So what are your expectations there? What are you seeing in terms of your inland markets right now? And, how much storage is taking place as a result of perhaps these supply chains not unlocking?
Yeah, David, what we've seen is continued pressure in the drayage market, last mile, first mile. What we're doing is we're offering storage solutions to our customers to help them keep their goods and shipments moving. We think that as 2023 unwinds, we're going to see an easing of those supply chain pressures. We're already seeing improvements in our intermodal revenue per ton miles, in our intermodal revenue ton miles, indicating the value that we're delivering to the market.
Shepard Smith here. Thanks for watching CNBC on YouTube.